Hey everyone, this is Jim from Auto Finance. Welcome back to our channel. We are with you on 9th of May intraday analysis, and with this video we are just opening the week. Alright, on this video, as I said, like I did classic, dollar index, gold and oil prices will be discussed. Before starting the video, I just want to share some news with you. This week is important because the inflation is in US, it's 8.5, and on this Wednesday another report for inflation will be released, and we will just see like an April inflation report, and then we will just see that one. And everybody is expecting a slowdown. Not everybody, but the estimates showing that slowdown in economy and slowdown in inflation is expected, but slightly. Instead of like 8.5, we are expecting 8.1. This is kind of peak moment for inflation if the conditions go ahead like this. So why is that? Like energy prices are rising, but why is that happening? Because of the interest rates in mortgages is just keeping home sales steady. That's why we see a decline. That's the biggest thing right now, stopping inflation going higher. If we just see another decline in energy prices, then we can just talk about 7 or 6% inflation in the coming months. But still, we just think about 1% only interest rates and 8.76% inflation. That means a lot of gap between interest rates. That's why we will see a lot of high interest rates in the coming months. That's all like it. As we know, all right, let's start with our first chart. As you know, like as you can see here, expectation for higher inflation for the next coming of months, and the gap between interest rate and inflation rate, negative yield is higher. People are just dumping their 10-year bonds, and that's causing more cash, and dollar index is rising with expectation of fast interest rate hikes. But when it happens, we will definitely see a crash in real estate, and that happens, then we will see a decline. So it's everything chaotic right now, but for something is certain, dollar index is unstoppable, and only slight easing from dollar index can be seen on Wednesday when we just see lower inflation rates. Until then, we don't see any relaxation on dollar index. All right, let's look at our second chart.
You are ready to win with us. GAN Markets.
All right, as you can see here, the gold is on decline. Our second chart is gold, and it's on big decline. The main reason for that is 10-year bonds. Why 10-year bonds are so important? Because as you can see here, and this is the line for that one, a lot of people are just selling these and then switching to high yield bonds. Right now, 10-year bonds real yield is 3.17. It's really high, and dollar index also like keeping pressure over golds. If we don't see any relaxation on 10-year bonds, we will see decline in gold prices. All right, our last chart is oil, US oil, crude oil. As you can see here, crude oil is just making some high levels, and then from that level we have seen declines. The reason is for this decline is high level of dollar index as a benchmark. At the same time, and global slowdown expectations in all over the world. For example, for the last couple of months, we have seen the minimum level of China imports rise was around like a 10-15%, but the recent data in import and exports was really slightly higher, than zero. It was 3.9 rise. So these kind of things are just fueling the fear of global slowdown in global market, and mainly because of these high energy prices. As long as we have high energy prices, we will definitely crash the markets, and that's really the biggest fear for the markets. All right, thank you so much for watching us. We will be together on more news, and then we will just cover more charts with you. Have a nice and profitable week. Bye.